It's officially 12 o'clock. Catherine, Nick, are you both ready to get started with our webinar?
Of course.
I am ready.
Fantastic. I want to thank everyone for joining us today. This afternoon and this whole series is really focused around small business owners who are just getting started. Today, we'll go through those initial steps that we want you to take, specifically focusing on entity selection, selecting a type of accounting program, the most fun choice of all, and starting a business, just to get you started off on the right foot. Catherine is our moderator here. If you have any questions that you want to run by me or Nick, you're more than welcome to send those to her in a chat and she'll relay them to us and we will answer those during our presentation. Nick is here along with me. Nick is our kind of bookkeeping guru and he is excellent in answering questions on how to implement technology, how to use your financials effectively. And my strong suit is working with small business owners and doing tax planning, as well as working on that bookkeeping side along with Nick, and any other special project you might want to throw my way that you want someone to look into. All right. It's always fun getting the slides to go for the first time.
You can view them, Jordan, if you're wondering that.
What's that?
I said we can view them if you're trying to figure that out. We can see them.
No, it skipped ahead a couple of slides and it's delayed and yeah. Well, we'll just go with it. So the first part that we're going to be talking about is, should I even start a business to begin with? I think one of the, there's a couple different types of scenarios that clients will come to me wondering whether or not they should start a business in the sense of actually registering it with the state and registering it with the IRS. And then also, should I start a business in general, which is normally, should I break away from my job and then start actually operating on my own, charging my own fee rates, run my own accounting, run my own business, become basically an independent contractor. So, sorry, still having some trouble with the slides, guys. Whenever you're considering, should you start your own business, one of the first questions you should ask yourself is, which way are you going to be compensated more for? The typical answer that you're going to get is you can make more as an independent contractor, but there's things that you need to consider before just making that leap, because you're going to make an extra 5, 10, 20, whatever dollars an hour. There's self-employment and taxes involved. There's expenses that you're going to have to cover on your own. You need to think about things like health insurance, retirement plans. All these different expenses, which are oftentimes covered by your employer, are no longer going to be. So you need to consider not only what is my pay rate going to be, but what is my at-home, take-home cash flow going to be? And that's normally an analysis that Hawk Cruzy can help with. And if you're thinking of breaking away from being a W-2 compensated employee to an independent contractor, it's probably the most important decision or the most important factors for you to take into with that decision. Nick, anything I missed on that?
Yeah, no, I think you're good to go. I think you made a good point on how important it is to consider the other pieces that would affect that decision on going by yourself as a contractor versus a W-2.
Fantastic. The other conversation that people come to me with is, I have a hobby that I want to turn into a business. Should I register it into a business? Does that legitimize it? If you have a plan for making money as a business, absolutely. There's different entities that you can register it under that makes it, it's not necessarily going to make you or break you in terms of a business. An IRS doesn't look at an LLC, snap its fingers and go, absolutely, that's a business. They're going to question things like profitability and things along those lines when considering whether or not it's a valid business. Whenever you're considering, should you start your own business, will it make money? What you should be thinking about is, how much cash can I take in versus what are my operating expenses going to be? So that's more in terms of that planning piece of, you should have a good idea of what your business is going to be before jumping in feet first, registering a business, and then just kind of stopping and looking around being like, was this the right decision? So just make sure you plan beforehand. And then lastly, the last question that I get, I think, is people who have W-2 employee jobs, who have a hobby, and they want to take their friends and go do that hobby, whether it be hunting, golfing, whatever. They want to turn that into a business. So I myself enjoy golfing. and I am a W-2 employee of Hawk Cruising Associates. Nick, if I came to you and I said, Nick, I love to golf. I am not paid for it, but sometimes I'll bring clients out to the course and I'll pay for that out of pocket. And I'd like a way to write that off. Does registering an LLC validate that? What would your answer be?
Probably not.
That's right. Probably not is the correct answer. So just because I slap an LLC on something does not automatically validate as a business. It is a nice piece to have. It is smart to do if it's a valid business, registering an LLC, registering a partnership, whatever. It's a good idea in terms of separating that legal liability from yourself. All sorts of good things can come from it. It is not a free pass for write-offs, however. And the IRS, if I were to put that together, would really easily look through that, immediately classify it as either a hobby or just a non-business at all. And I would then be forced to pay taxes on all those write-offs that I've taken over the year, because they would certainly catch me if I just showed profits or losses, just losses over the course of years without ever having income to offset it. So next we're going to go into entity selection. So let's say you've determined I am absolutely a business. I want to move forward. What's the best way? So there's sole proprietorships, LLCs, partnerships, S corporations, and C corporations. LLCs are fantastic for especially single owners. So the difference between a sole proprietorship and an LLC is simply the sole proprietorship is a registration with the IRS. I don't see a lot of need for registering as a sole proprietor unless you perhaps live in a state where LLCs have to pay $800 in taxes for simply existing, like California, or even New Jersey, where maybe you pay around $200. So if that exists and you have a very low liability in your business, if I am doing something to where the odds of me being sued personally are just non-existent, essentially, maybe you get a sole proprietorship in that case, registered in an LLC. The fallback should be, in my opinion, LLC, and then if certain circumstances opt you out of it, that's fine as well. The difference between an LLC and a partnership is an LLC, it can be a partnership, it can be taxed as a partnership. Both are registration statuses with the IRS. I won't go into the legal difference between the two. Tax-wise, if you have two members in an LLC, it's essentially treated the same as a partnership. Partnerships versus S corporations, there's different rules in terms of what's considered basis in this company. So let's say I have an S corporation where I want to invest in a rental property, and I do that through securing a mortgage. And let's say I write off lots of losses in the first couple of years because I can't get good renters and I have financed most of my purchase price through mortgage, so I have a lot of interest to pay, a lot of repairs, things like that. If I primarily finance that business through a loan, S corporations don't allow me basis in that company for guaranteeing a loan, but a partnership would. So depending on the debt structure of your business, that can also impact which one you would want to select. And then lastly, there's C corporations. So C corporations can be great for taking a company to market where you want to take on different tiers of investors, things like that. I would say if you are starting a company with the intention to sell it fairly quickly, a C corporation can be a great option for you. The downside of a C corporation is its double taxation rule. So let's say I own 100% of a C corporation, and let's say that C corporation makes $100,000. It's going to pay income taxes on that $100,000 of, call it, $30,000. And then let's say I want to take the money that's left over and I want to give it to myself as the owner because I need money to live on, obviously. I'm then going to have to pay another tax on that as income, as the owner, as a dividend. So that's going to be around 20% rate, depending on your personal tax situation, but 20% is normally a safe bet. So C corporations aren't necessarily great if you're wanting to continue to operate a company for profit, where different tiers of investors aren't necessary or where you're not wanting to take it to market. I will say most small business owners don't start out as C corporations. It's not unheard of, but it's something that's fallen out of favor in recent times, I'll say. Nick, anything that I've missed there?
Yeah, if you mind going back to the S corporation piece on how that might be beneficial to a business owner, I'm
So S corporations historically have not been subject to self-employment taxes, which was always the big draw. However, there's been a change in IRS regulations to where additional taxes are assessed on S corporation earnings. I have not personally researched to see exactly what income levels would maybe validate having an S corporation, but it's just not as beneficial as it used to be. That doesn't mean there's no benefit to it, but S corporations are more restricted. They require more administration because you're required as an S corporation owner to pay yourself an actual salary. So you have to then therefore pay someone to do your payroll, and you have to file W-2s. There's extra administrative burdens. There are extra restrictions in terms of the types of shareholders an S corporation can have. So there's all these extra restrictions on S corporations. And if you've lost the main benefit of no longer having that self-employment tax, which you still don't, you just have a different style of tax, it may not be beneficial for you to register as an S corporation anymore.
I have a couple of questions, Jordan, when you get a chance. So first question, let's say you want to set up an entity. Who does that for you? Who should do it?
That's a fantastic question. There are a couple different people that can do it. So a business owner is able to do it themselves. We'll kind of get into that in the next slide. A lawyer is able to register that for you, and also your CPA is able to register that for you. So any of those three parties are great choices for it.
Excellent. And then just as a follow-up to that, like what is the role that an attorney should play when determining an entity?
I would say that the accountant and the attorney can both play fairly equal roles in determining what the most beneficial entity is for you. I would say lawyers should be intimately involved, especially in developing operating agreements. Not necessarily the selection of the entity, but they can still be very helpful in that. But where a lawyer is really going to provide a lot of value is developing those operating agreements, which is the rules that businesses operate based off of. And those, while not always used immediately, are absolutely necessary, especially in times of conflict. It determines the rules for what if someone wants to leave a company? What if someone wants to put more capital in, but someone doesn't? Do they get diluted? All sorts of these things that can create friction between partners that gets set out beforehand by those lawyers. So that's where they really come to play, I think.
Excellent. Thank you.
Any other questions, Catherine?
Nope, not right now. But if you do have a question, remember that you can either send me a chat through the chat function, or you're welcome to click on the Q&A section at the bottom and send a question that way as well.
Sure. So let's say you've gone through the steps of, you've decided it's beneficial for you to become a business owner or start your own business, and you have a good idea of what structure you want to put in place based on conversations with lawyers, your own self-research, or conversations with your CPAs, or all of the above. You know, what's the next step? Let's say you wanted to do it yourself. The next step is going to be, first register with the Secretary of State. Those are typically going to have registration fees of under $100. That's essentially you notifying the Secretary of State or the state know that you intend to operate your business within the state of Missouri, for example. Registration processes are fairly straightforward. I'll say that you can have issues if you register your business incorrectly. It's more difficult to correct it than to just register it correctly in the first place. So if you are afraid of making mistakes, or you don't want to deal with it, which is a perfectly reasonable thing to not want to do, you can contact HKA, you can contact a lawyer, as we said, and they can register it for you. So you'll register with the Secretary of State. The next step would then to be obtain an EIN from the IRS. That is free. So if you go to a website and someone's asking you to register an EIN and you have to pay money, you are on the incorrect website. The websites that sometimes come up on advertisements from, Googling IRS register EIN can look shockingly similar to the actual IRS website. So be very careful. I have gotten halfway through a process, saw that they were asking for money and had to start over again, because I then realized that this was a third-party website trying to get paid for essentially sending information that we were typing in to the IRS. But we caught that, and obviously we're able to mitigate that. And then after you've obtained your EIN, which is basically your social security number for your business, you can then open bank accounts and start your operating agreements. And once again, those operating agreements, which I referenced before, oftentimes overlooked. If Nick and I were getting into business together and we get along really well, it's very reasonable. And I hear a lot of, well, that we're not going to need necessarily an operating agreement. We're on the same page. Well, we're on the same page right now, but in 10 years, that answer might be different. And it's a lot easier to come up with an operating agreement for everyone to agree to and have the rules to abide by right now when we're getting along, versus trying to figure it out later down the road whenever we're probably mad at each other if we're referencing an operating agreement, or we're wanting to treat each other fairly, but maybe it gets a little bit uncomfortable in terms of buying another partner out, things like that. So absolutely, that should be one of the most important things that you start with, is getting that operating agreement squared away. Nick, anything that I am missing with that?
No, I just want to maybe jump to your next point, is getting bank accounts. That's something that seems to be maybe a lag point after all these steps have been completed. I would suggest go to the bank as soon as you can to get that done so you can start operating.
Yeah, and let's kind of get into why that's important. A lot of times, one of the issues that I see a lot of new businesses have, especially, is an intermingling of business and personal funds. And that's not necessarily something you want. It breaks a legal veil whenever you have an entity in place. If you're commingling those funds, are you really operating a separate business? So if I hurt myself while interacting with your business and I decide to sue you, all of a sudden you've opened up your personal life to me, which allows me to maybe sue you for more, versus if you just had that LLC operating separately in its own business. It keeps that legal veil. And also, it's just good for tracking the success of your business. It's a lot easier to see that your business is making money and doing what you want it to do if you keep those business funds separated. It's very easy to identify, I've made a profit this year. Whereas if I am throwing every meal I eat and every single expense I could even think of, whether it's legitimate or not, into this business, you may say, well, I'm really not making any money. Well, in reality, you're just funding your lifestyle with this money. So your spending habits are what's causing you to break even as a business, not necessarily the success of that business. So getting that separate bank account and keeping that discipline of keeping those transactions separate is vital for you to understand, how is your business actually working in these beginning months of operation. And then next, what you're going to do is set up your accounting package. And as I said, that is Nick's area of expertise. So I'll let him kind of go into what he recommends to look out for during those times.
Yeah, so after all those steps, it's definitely time to start thinking about what your business should utilize from the accounting side of things. So here at HKA, we like utilizing technology as much as we can. So should you be on the cloud? So being on a software like QuickBooks Online and Xero is probably your best bet. That's something where you can access your books and records from anywhere on your phone, iPad, laptop, etc. Some other things to consider as well is how are you going to collect revenue? How are you going to send invoices out to your customers or clients? What's that process look like? How are you going to pay your bills? How are you going to receive bills from vendors? How are you going to pay them? Do you want to sit down and use a lot of time during a busy week to write checks, or do you want to utilize technology? And then Jordan kind of mentioned it as well with the bank accounts, but what reports do I want to look at? How do I want to see the business, how the profits are looking? How do I want to track cash flow? Those are all things to really consider. And then your initial steps after you consider those items are, of course, choose the right accounting software. As I mentioned, QuickBooks Online and Xero are both cloud-based softwares. They're both great. Some of them Xero has benefits over QuickBooks Online with some respect, depending on what your needs are. And then same thing for QuickBooks Online over Xero. But once you choose either one of those great products, definitely start creating your chart of accounts. Make it simple and to the point. I recommend not going too crazy on the chart of accounts. So make sure your assets are your bank accounts, your accounts receivables, any fixed assets that you own, liabilities, really simple with accounts payables, loans, and then your revenues should be just a couple of line items, not to get too confused, and then expenses very straight to the point. to make sure whenever you're looking at the reports, they don't get too long and bogged down.
Could I ask a question on chart of accounts really fast?
Sure.
What if you have never run a business before? Let's say you are getting ready to start your own jam making business and you majored in English when you were in college. Like, so when you say simplify your chart of accounts, is there a way for someone who is trying to start a business but has like no relative idea of where to start? Like, how do they figure out where, like even where to start? Like, can they Google it? Does the software come with something to start with? How do they know like where to be looking or how to simplify what the category should even be?
Yeah, so when you sign up for basically any of the online accounting softwares, there are going to be a base chart of accounts already in there. And really, if you're starting up brand new, you could use 95% of the chart of accounts that are already there. So that's a great start. Of course, you can call Hot Cruisy if you have any questions on how to set it up. But the chart of accounts really are going to contain your assets, so everything that the business owns that are working for the company, the liabilities, so things that you owe. It'll have your owner's equity section as well. And then of course, revenue, so money that you're bringing in, and expenses, cash are going out. Those are the big components that go into the chart of accounts.
And I would say as a rule of thumb, your goal should be to get your reports onto a single page. So if you have a profit and loss that is running 2 or 3 pages long, it's difficult for me to track it. And I look at those every single day. So my recommendation is keep it as short as possible. Whenever you're doing that, think about expenses that don't necessarily need to be separated. So if this person has a jam making business and they're separating in, this is the cost of my lids, this is the cost of my jars, this is the cost of the string. You could probably combine that all into supplies or bottling supplies, jarring supplies, whatever you want to call it, rather than having 4 different categories that maybe don't add a whole lot of value, each being listed separately.
Right. Yep. I definitely agree with that.
Excellent. Thank you.
Yeah, and then next step, connect your bank feed. So a great thing about these 2 softwares here, they have the ability to connect straight to your bank account, so they can, whenever you have a transaction that rolls through the bank account, it will automatically download into the accounting software, so you can begin reconciling and tracking the accounting from there. And then connect your app. So this really depends again on the last slide on what you need for you to operate the business, how you're going to invoice, how you're going to pay bills, are you running payroll? There are a lot of great third-party apps that connect directly to the accounting software. Some examples for payroll: Gusto, accounts payable, receiving and paying bills. That would be bill.com would be a great one for that. So if you have any questions on what you should consider, how do I connect these, feel free to give us a call. And the great thing too about QuickBooks Online and Xero, they have a library of apps where you can search to see if it connects. Definitely take a look at that.
Could you talk a little bit more about why the bank feeds are so important? I feel like we have a lot of clients who are maybe either intimidated or they're not totally sure how it will work. And we do end up like helping a lot of people with that. Why is it so helpful to have those bank feeds connected?
So it's extremely helpful to save a lot of valuable time. It's definitely, you can argue that most business owners' time is well spent doing on things to build the business, not downloading transactions and importing them into Xero or hand keying transactions into Xero or QuickBooks. So really the value is saving the time so it's readily available for you when you're ready to go in and take care of those transactions.
I'll also say even beyond the time save, it's not only does it save more time, but it's also normally, in my opinion, more accurate as well. Whenever those feeds are automatically coming in from banks, there's a much higher chance of every single transaction being captured versus it's very easy to overlook 1 or 2. And those 1 or 2 transactions could be pretty large. And then you can spend a lot more time, once again, trying to find those transactions later to make your financials accurate.
Right. Yeah. And just to kind of expand on that, if you import a list of transactions, it could be as simple as, mistyping a number or putting a decimal point in that could really throw everything off. So if the bank feed's available, connect it.
Thank you.
Fantastic.
All right, go to the next slide.
Yeah, so this is just kind of a wrap up. So this is really not working well today. Well, the next slide is basically talking about what we'll be doing next week. I want to thank everyone for joining us today. If there's any other questions before we wrap up here, make sure to type them in. And if we're not able to get to them, you are more than welcome to contact our office at that number listed on the slide, or email either Nick or I directly. We'd be happy to have a conversation, especially the people who are kind of taking those first steps towards starting their business. Be sure to join us next week. We'll be talking about, once you have your financials going, how do you actually read those and use those effectively? A very important tool, especially for new business owners, but also just as important for seasoned business owners alike. And looking forward to speaking next week. Catherine, anything else before we sign off?
I don't see any other questions right now.
Perfect. All right. Thanks, everyone.
Thank you.